Everyone thinks recessions just happen, like bad weather, like a surprise storm that nobody saw coming. But what if that's dead wrong? What if recessions aren't accidents at all? What if they're managed events? Because every time the economy tanks, the same players survive, the same banks get bailed out, the same assets get cheaper, and somehow end up in the same hands. And here's the wild part. The Federal Reserve already knows what to do before a recession even hits. They've run this playbook before. They'll run it again. And most Americans won't realize what happened until after the damage is done. Tonight, we're breaking down the Fed's secret recession playbook. How it started, how it works, where it breaks, and why the fallout always lands on regular people. Stick around, because the ending connects directly to what's happening right now. Setting the stage, who really runs the game. To understand the playbook, you got to understand the referee. The Federal Reserve isn't a normal government agency. It's not elected. It doesn't answer to voters. And it controls the one thing everything else depends on: money, interest rates, liquidity, credit, the cost of debt. The Fed was created in 1913 after a series of financial panics, sold to the public as a way to stabilize the economy. But stability for who? Banks needed a lender of last resort. Politicians needed a way to finance wars without raising taxes. And Wall Street needed someone to clean up messes when bets went sideways. From day one, the Fed's real mission wasn't protecting workers. It was protecting the system. And that's where the playbook begins. Origins: how the recession playbook was built. The first version showed up during the Great Depression. The lesson the Fed learned wasn't, never let this happen again. It was, control the flow of money, and you control the outcome. Fast forward to the 1970s. Inflation is out of control. Gas lines, stagflation, chaos, Fed chair. Paul Volcker jacks interest rates through the roof, over 20%. It wrecks the economy, unemployment explodes, small businesses get crushed. But inflation dies. That moment locked in the core rule of the playbook. When the system overheats, sacrifice growth to save credibility. Pain is the tool. Recessions are the reset. And once the Fed realized they could engineer downturns, they never stopped. The rise, modernizing the playbook. By the early 2000s, the playbook got upgraded. Dot-com crash, cut rates, housing bubble popping, cut rates harder. 2008 financial crisis, break the glass. This is when the Fed went full mad scientist. Zero interest rates, quantitative easing, trillions printed out of thin air. Banks got saved, markets recovered, stocks ripped. But Main Street? That recovery was slow, uneven, and shaky. Here's the cause and effect most people miss. Cheap money doesn't help everyone equally. It inflates assets first: stocks, real estate, bonds. People who already own assets get richer. People who work for wages get left behind. The Fed didn't just stop recessions, they postponed them, stacking risk higher every time. Like kicking a can down the road, except the can keeps getting heavier. The breaking point. When the playbook fails. Every playbook has a weakness, and the Fed's weakness is inflation. After 2020, they went nuclear. Stimulus checks, PPP loans, zero rates, unlimited QE, money supply exploded, supply chains snapped, prices went crazy, groceries, rent, gas, everything. Suddenly, inflation wasn't transitory. It was real, it was sticky, and it was political. So the Fed flipped the script: rates up, liquidity out, pressure on housing, tech, startups, and debt-heavy companies. This is the intentional slowdown phase of the playbook. Not to crash everything, just enough to restore control. But here's the problem. America is now addicted to cheap money. Debt levels are historic. Government debt, corporate debt, household debt. Raising rates doesn't just cool inflation, it threatens to snap the whole system. That's the breaking point. Fallout. Who pays the price? When the Fed tightens, the pain always rolls downhill. Layoffs hit first. Hiring freezes. Credit dries up. Small businesses fold. Rent spikes. Defaults creep in quietly. Meanwhile, Big banks adjust, hedge funds hedge, institutions buy the dip. This is the dirty secret of the recession playbook. Recessions are redistributions. Assets move from weak hands to strong ones, from over-leveraged to over-capitalized, from workers to owners. The Fed doesn't cause recessions by accident. They manage the speed, timing, and severity. And by the time the average American feels relief, the game has already reset. Failed fixes. Why the solutions never stick. Every recession ends the same way. Rates go back down. Stimulus comes back. Debt grows larger. Each fix plants the seed for the next crisis. Why? Because the Fed can't solve structural problems with monetary tools. They can't fix wage stagnation, productivity gaps, housing shortages, political gridlock. All they can do is manipulate money. And money manipulation always creates side effects, bubbles, inequality, fragility. The playbook keeps the system alive, but weaker every cycle. Modern parallels. Why this feels familiar. Look around. Yield curve inversion. Commercial real estate wobbling. Banks quietly tightening credit. Sound familiar? That's because we've seen this movie before. Same patterns, different excuses. The shocking data. Over 70% of Americans live paycheck to paycheck. Household debt is at all-time highs. Savings rates are near historic lows. That means the next recession won't just be financial, it'll be personal, and the Fed already knows that. The takeaways. What this really means. Here are 3 truths most people never hear. 1. Recessions are policy tools, not natural disasters. 2. The Fed protects the system first, not the public. 3. Every cycle transfers more power upward. The warning? If you think this time is different, that's usually when the playbook works best. The open-ended thought? What happens when the Fed runs out of room, and the pain they need exceeds what the public can take? Call to action. Natural and real. If this video made you rethink how recessions actually work, hit like. It helps more people see this. Subscribe if you want more deep dives into money, power, and financial history they don't teach in school. And drop a comment. Do you think the Fed still controls the game? Or is the system finally slipping? Because once you see the playbook, you can't unsee it.